Bismillahirrahmanirrahim. Assalamu alaikum. My name is Sauda Hyder and I'm going to teach you today financial statement. This is a compulsory question in our first year accounting and it entails 30 marks. So today I'm going to tell you the importance and how it works and how we can solve this question in a paper. In this video, I'm going to tell you first of all what is the meaning of a financial statement. Basically, financial statements are prepared at the end of the accounting process or at the end of the accounting period, and the purpose of this financial statement is to communicate the accounting information to the internal and external users of the information. So here it's going to depict financial position and performance of any organization, and it is going to be prepared at the end of the accounting period. Here financial statement has four major components. The first one is income statement, second balance sheet, statement of retained earnings, and last but not the least, cash flow statements. Today in this session we are going to discuss income statement and balance sheet because these two things are integral part. These two components of the financial statement are the integral part of our accounting syllabus, so we are going to emphasize on it. First of all, I would like to explain income statement. The component of the financial statement which I'm going to discuss here is the income statement. So it is also known as profit and loss statement. Basically, in a simple way, which I would like to explain you, that it is a sort of a statement in which calculations of a gross profit and then net profits are presented. It shows the net results of the business operations, that is net profit earned during the year or maybe loss incurred during an accounting period. It is further two major parts which are required to be discussed here: expenses and revenues. If revenues are greater than expenses, it means we have more earning than whatever we have spent on it. So we will enjoy profit or a gain. If expenses are greater than revenues, it is a bad situation. It means cash outflows are greater than cash inflows. So it means the company has incurred loss. So I would like to clarify that there are certain components which are required to discuss in this income statement and which we are required to be learned. These are: the first component is sales. Basically, sales represents that amount of money that the business makes from the sale of its merchandise, and after deducting discounts and refunds. For example, we can say sales returns and allowances and sales discount. We are having a gross sales, and if we have sales discounts and a sales returns and allowances in a question, so we will take the final amount. It means a net amount. Next, we have cost of goods sold. The cost of the merchandise. What is a cost of goods sold? It is a cost of the merchandise that the business sells, and the business, for instance, the merchandise inventory is going to be sold at that cost, is known as cost of goods sold. When we are going to take a difference between these two, sales less cost of goods sold, so we will get gross profit. Gross profit is a profit that amount need to be manipulated, need to be adjusted by some operating expenses. Now, what is a concept of operating expense? It is an expense or a cash outflow which is required to be incurred to generate revenues of the business. After deducting these expenses, we will get net profit, or we can also incur loss here. So this is a concept about a component of a income statement. Before switching towards balance sheet, I would like to highlight the importance or a significance of a profit and loss account or income statement. That is, it shows a financial performance of the organization, and also tells you about the profitability, and also controls unnecessary expenses, as we have already calculated here all the expenses. So we will easily come to know that how much we have spent to generate these revenues. So here we can control unnecessary expenses, and it is also helpful in preparing a balance sheet. Now we are going to switch towards balance sheet. It is a report which shows in a statement form, and it shows the relationship among assets, equities. Now, what are the equities? Equities are the combination of liability and owner's equity. So in short, we can say that balance sheet depicts the picture of assets, liabilities, and owner's equity. It shows that what company owns in the form of assets. It shows that what company owes in the form of liability, and what is left for the owners. It is a snapshot. Balance sheet is a sort of a snapshot of a financial condition or position of the business. Entire situation of the business concern can be understood at a single glance. If we go through the balance sheet, we can easily come to know about the assets, equities, or we can say the liabilities and the owner's equity of the organizations. As far as its significance is concerned, it indicates the financial standing of a company or a position. Also, qualification, it tells you the qualification or a position of taking additional loans. Either you are able to take loans or not. It shows that how much finances you are required, how much investing activities have been performed. So today we have discussed two major components of a financial statement: income statement and balance sheet. First of all, we prepare income statement, then we switch towards the balance sheet. In this session, I have given you a brief review about these two components of a financial statement. In the next session, I will give you a specimen or the detailed information about the components of income statement and also balance sheet. Thank you very much. Allah Hafiz.